Well. Good morning. Good Saturday morning. It is Saturday, October 4th, 2025. This is Mr. Not Advice Weekend Update. As always, this is for entertainment and education purposes only. Great way to start the morning with probably one of the first rap songs that I ever heard. Didn't know it was rap at the time because they were out of Jersey, or out of the Bronx actually. So anyway, we had a hell of a week this week. Quite frankly, we had a lot of what would normally be big, uh, big event data with the government shutdown. We also have a ongoing, supposedly, peace plan going on in Gaza. And then we have the overall market, which seems to not really care about anything else other than going up, which is not surprising given the time of year, as I've been saying since April, that I felt that the market structurally was going to continue to advance because primarily driven by money supply, right? There's a tremendous amount of money flooding into the system through interest rate cuts globally. You've heard this from me before. We've had over 45 interest rate cuts globally, and every time an interest rate is cut, that's more money into that system. And that money's got to find a place to go in order to make a higher rate of return than what they're borrowing it for. So it's been going into stocks, gold, silver, crypto, and I would say it's been begrudgingly going into that because this has been one of the most hated rallies. Continues to be a hated rally as I continue to hear expert upon expert saying this is the top. Well, I don't know if it's the top, but I will say that there are rising risks, and we're going to go over those today. So we had a wild macro week. We had the Bureau of Labor Statistics is shut down along with any other government reporting agency. So it's funny because the market says, oh, we're flying blind now with jobs. Well, not really, because jobs have continued to be revised downward because the Biden administration lied through through his entire term. And Besant even came out and said it a month or two ago that, look, the numbers from the government are not going to be trustworthy until probably early 2026. So all of this, the market's always looking for a reason to move well, let me put it a different way. The market's always looking to take something and straight line extrapolate it and then either say it's the end of the world or everything is fine. And it's never like that, right? So what I keep in mind is, and for my trading style, where my average trades in the market 14 days, I keep an eye on the macro, I keep an eye on the headlines, but at the end of the day, as I do with my trading, I have to wait and see if there's an actual event that causes price to weaken or causes it to go up, because if I step outside of that methodology, what I'm effectively doing is trying to predict the market, which I cannot do. Okay, I use price levels and probability and experience. So looking at this week, again, we didn't have jobless claims, we didn't have factory orders, we didn't have payroll data. Okay, and what we did have was some soft data, which was ISM services. And then we had hard data, which was housing data, along with a strong JOLTS report. So this chart is showing that soft data looked worse and hard data looked better. Well, here's the problem with this. If we're just, the overall market is going to pretend that it's flying blind, so to speak, and it's going to allow that to factor into their risk profiles because at the end of the day, market needs data to justify their thesis. It's not they need the data to create their thesis. Most of these so-called experts have their thesis, and they need the market data to support that. So, but they're wrong all the time. Remember, in the beginning of the year, Trump's tariffs were supposed to just destroy our economy. and destroy the global economy. And yet here we are. And countries have lined up, and we have record tariffs coming in, um, to the point where Trump's next stimulus trick, I saw mentioned over at the end of the week, was perhaps sending out 1,000 to 2,000 to every taxpayer in America. Well, let's just take a look at that. If he sends out $1,000 to every taxpayer in America, uh, we are we are talking hundreds of billions of dollars. So that's stimulative. So the last time they did that was during COVID, and that's why people went out and bought a crap ton of new cars. That's when the average car payment term stretched to 72 months, unbelievably ridiculous, and the average car payment went over $1,000. Okay, so I would expect if he announces a $1,000 to $2,000 per taxpayer tax rebate check, that it's going to goose our economy. Additionally, we are going to get additional interest rate cuts. Now, the one good thing about not having jobs data is Trump can point to the trend of jobs, the trend of the JOLTS report showing only really hiring in mining, healthcare and healthcare services, and he can use that to justify, and I don't think he needs to justify it, by the way. There is job loss going on. He can use that to justify an additional interest rate cuts. Now, one of the commentaries I read was that perhaps in October, this might open the door for the Fed to cut by 50 basis points. I don't think so, because I think Jerome Powell is an a-hole who's completely political. You know, it's taken me years to get to that point. But this last garbage conference that he had, where he was still focused on inflation, are you kidding me? I mean, tariffs were supposed to cause incredible inflation. They didn't, right? And I told you they wouldn't, but the so-called experts, oh yeah, tariffs are going to, no, they didn't. So Powell came out in his last press conference 2 weeks ago, and instead of acknowledging the fact that jobs destruction is going on faster than any inflationary pressures, he's focusing on a couple small areas, small pockets of inflation. But the big area of inflation that I watch is oil. Okay? Oil is at 60. Oil, Saudi Arabia is America's effectively, it's not a nice word, but they do whatever we tell them to do. And they are going to continue to increase production to jam the price of oil down. Oil, gasoline, petroleum products. I read, I think it was Peter Lynch. It was one of the old, value investor legends. And his commentary was, you can raise prices on groceries and you can raise prices on health insurance and all those things. But where voters get really pissed is when they go to the pump and they fill up their car. And so if you increase those prices, what's going to happen? You're going to see less spending from every voter on everything else. It's amazing how, people will rightfully complain about their insurance costs going up or property taxes, but there's little that they can do about it. And there's really little they can do about prices at the pump, but that's the one that pisses them off. So as long as I see oil continue to be below $70, there's not going to be inflation. Period. Okay? We may have pockets here and there, but we're not going to see a full-blown case of inflation. All right? Let's take a look at this. This is this week. So since the shutdown, okay, the market has ripped higher. Green is your shutdown. This week we had, over the last couple of weeks, it's been small caps that have been driving the market higher. In fact, in addition, I've been saying this in my end of day updates, the most shorted basket of stocks, okay, and this is according to Bloomberg, where I'm getting these numbers, the most shorted basket of stocks this week triggered the second largest short squeeze of the year. Now, some of that could have been into quarter end as we got into window dressing, But I think some of it is a lot of it is in preparation for what I have been calling for is this melt up, this blow off top, this continued bullish move into the end of the year because it's frustrating professionals. Professionals continue to try to sell this market, and yes, we're starting to see obviously CTAs and hedge funds increase their long exposure, but they hate this rally. Those are the types of rallies I like, by the way. If we look at the top performers this week, we've got healthcare was outperforming, and utilities. Purple is healthcare, and we've got utilities right here. The big laggard was Blackline energy sector. Okay. Energy stocks continue to get crushed. Why? Because the price of oil's down. And with the price of oil down, their margins are much tighter. I've seen the rig count in America is at its max. The rig count is there's only a certain number of rigs across the nation. And once they're leased out, okay, that's when you might start seeing some of the operating costs go up for the drillers. Well, the rig count's going down. So it means that companies are pulling back drilling for the time being, okay? But that's not something they can turn a switch on, by the way. Having worked intimately with oil companies as well as working with, negotiating with for land lease and drilling rights, we're talking 6 to 9 months minimum. That's if they can secure the rig. There is a lag time that if the price of oil starts moving up, okay, drillers are going to want to obviously start drilling again. Well, they can't just turn on a switch and do it. As I said, it takes 6 to 9 months, and that's if they can get a rig leased. So, but right now, as long as Trump continues to put pressure on the Middle East, and big one is Saudi Arabia, as long as Saudi Arabia does what we want, the price of oil is not going anywhere. And they're going to do what we want for two reasons. Because the Saudi prince, okay, was saved, now a little bit tinfoil hat here, but the Las Vegas shooting that happened during that concert, there have been more and more reports that I've seen that the Saudi prince at the time, and there's shots of him being escorted through the casino, that it could have been a hit job on him. And I think that's why he and President Trump are so close. So my point is, for whether it's that reason that, the Saudi prince attributes Trump to saving his life, or the Saudi prince is just being told what to do because they're getting a tremendous amount of weapons from the U.S., irregardless, oil's not going up for a while until Trump and the Saudis want it to. Taking a look at the S&P 500 versus the Mag 7, this is a little different. The red is the Mag 7, and it lagged compared to the other 493 stocks. And we saw that this week. Every day, I always monitor a couple of the Mag 7, Meta, Tesla, Nvidia, Google, Amazon, and especially on Friday, I saw the market strengthen, and they had a hard time. It's Thursday or Friday. They had a hard time gaining any ground. So I'm not surprised by that, but I'm not also thinking, oh, all of a sudden everyone's getting out of the Mag 7. They're not. Some of that was end of the quarter window dressing, and I think right now we're going to start seeing a push after the first week of October. We're going to start seeing a push in the Mag 7. It's going to help lead the market higher. If not, we have small caps that will lead the market higher, and that will give me more evidence that the top is near, because the dash for trash, as I call it, is happening. In fact, if we want to take a look at the dash for trash as it's starting to warm up here, this chart shows the Goldman Sachs non-profitable tech basket versus the Goldman Sachs tech mega cap. Well, look what happened. Non-profitable tech is massively outperforming mega cap tech. Yeah, when I say non-profitable tech, I'm talking about small cap companies that don't make any money, that a lot of them are gambles. And a lot of this is AI driven companies. But this is starting to show me that, yeah, we're getting closer to a top here. But calling tops is really, well, it's not a winning strategy. It's very hard to do. So I've heard some commentary. There's always market participants that are focused on the VIX. And every little spike in the VIX is, oh my gosh, look at all the money rushing in that wants to be protected in this market. It's all bullshit. I believe that the VIX is broken. And I think the VIX is broken because zero DTEs came in. VIX was usually, originally used by institutions as a way to hedge, as a metric to hedge by. And zero DTEs, because so much institutional dollars are going into zero DTEs, they can hedge on a real-time basis, and they can with the ability, the computing power that exists today. So what I'm looking at here is just the volatility profile. This was for Friday. Uh, there's no, on Friday there was zero volatility melt up, and that was with the market going down in the morning. So I'm not concerned about the VIX one iota. In fact, I tend to ignore it. I pay attention to it because other people pay attention to it. So Bitcoin ripped higher. We had a hell of a move on Friday. I think it was up almost 3,000. It almost hit an all-time high. Came super close, 123,000, which is the best high since the election, November 2024. Now, seasonality is in Bitcoin and Ethereum's favor. The fourth quarter is also altcoin season. We're almost through the corrective period, which is the last 2 weeks of September, the first week to two of October. I think that Bitcoin is going to take out its all-time high this week. And I don't know, Ethereum's a little bit further down. We'll take a look at the chart. But I think ultimately Bitcoin is going to pull Ethereum up. And we're going to see all-time highs fairly quickly. Ugly week, as I said, for crude oil. So we're hitting prices here at this 60 handle. We haven't seen this on a weekly basis all the way back since May. As long as oil prices stay low, we are not going to have any significant movement in inflation. Yeah, there we go. Let's take a look. This is another thing I put in over on my negative side of my balance sheet when I'm looking at trades or looking at the economy. This is Blackstone's private credit. It's a fund, and it's getting murdered, which makes sense because most of the private credit in there are real estate loans and derivative mortgages, and it's garbage. Now, the question is, will this, if we have enough private credit funds fail, will it cause a domino effect and trigger off a mini sort of 2008 banking? We have a banking expert in our Discord, and I asked him a couple months ago, how long could banks hide the trash on their balance sheet? His response to me was forever. They literally can hide it forever. They can continue if you owe money to the bank, you're a big property owner. The bank can just continue to extend when you have to start paying again. The bank can rework and say, don't pay for 6 months, we'll throw it on the back end of the loan. But what's starting to happen is we're starting to see cracks in that where it's not the banks, but the property owners can't pay taxes. So so that's the first issue. And some of these investments are part of much larger funds. I saw it in Denver, two of the largest, I think it's two of the largest towers. They recently sold for something like $4 million, but 6, 7 years ago, they went for over $100 million. It's just amazing, the wealth destruction. But how long, will this Blackstone private credit, is this a canary in the coal mine? Is this a indication, an example of further failures? It could be. It could be. I also saw this week some chatter about a couple, I think I mentioned it last week, clearing firms that were having issues. We did see a very large, 2 weeks ago, that one of the largest lenders for subprime auto loans, okay, went under. And then this news came out this week, which is 29,000 loans pledged to creditors were tied to vehicles already securing other debts. Look at this one, 40% of 70,000, that's that 29,000, have loans that there's another loan that are that use the same VIN. So fraud. But here's the problem. This company fails, but it's the investors who bought that debt. So that could be an issue. Do I think it's going to collapse the banking industry? No, I do not think it's going to collapse the banking industry. Do I think it's going to get harder to get a subprime auto loan? For a while, but there'll be another company that pops up, or maybe the banks will decide to go down in their credit quality. But this is something I'm watching. So what this news is telling me is that obviously this is a bad lender. They lied. They're going to get caught. Behind the scenes, remember, you have investors, which are going to be large hedge funds, private equity companies that bought that debt, banks, insurance companies. So they bought that debt, and now they're finding out some of that debt is garbage debt, right? It's not real because they're using collateral on two different loans, same collateral, beyond the fact that there's a subprime lender, right? All right, let's take a look at the market. This week we had the S&P 500. Weekly's on the right-hand side. The daily's on the left-hand side. We had the market close at a new all-time high on a weekly basis, as well as it set a new weekly all-time high intraday. I would expect that to continue. The Qs this week, we triggered a new all-time closing high on the Qs. Friday was a little bit of a weak day, but I'm pulling back to the weekly chart, and it is strongly in an uptrend. Yes, I saw nothing. Here's the VIX. Where are we at? Big deal. The VIX, people chirping about, oh my gosh, we're up from 14 to 16. Sit down. Look at this VIX weekly chart. Okay. Could there be a spike? Sure. Can anybody predict it? No. So people talking about the VIX are, I think it's ridiculous, quite frankly. I think the VIX is a broken indicator. And I think every single time I've tried to trade it, it hasn't turned out well. So maybe there's a little bit of bias. Taking a look at the stocks that I follow, we are in a UPXI trade. That was a great trade that we got in. I think a StarPack trade. When I say StarPack, it's one of our members. So yes, we entered UPXI, and we entered on this break right here. Okay. And we are up quite a bit intraday until the markets decided to sell off a little bit into the close. But it looks very good. Even on a weekly basis, we have a breakout right here. So looks good. Tesla, we tried to get long Tesla this week. Okay. And then Thursday happened. This is an ugly candle, people. This candle is, talk about not only major rejection, but major rejection, because they closed it at the low of the day. So Friday actually triggered what I call a high close doji. It's a reversal pattern. Okay. So Friday triggered that. So one of the benefits of taking a look at the weekly at the same time is saying, oh my gosh, should I get short? Well, you can see here that I've been saying I'm not getting short until we break 400. Until you go to the weekly, it puts last week into perspective. That was an ugly week, not a good week. So we'll have to see if we're going to start seeing consolidation or further weakness in Tesla. Russell 2000, the rut, which again, we have been trying to get long. So originally we were trying to get long here. Then we tried to wait for this break. And now we got to wait for this break up here, 2,500. Okay. Looking at the weekly, here we go. Again, we're going up. So I'm not concerned. I want to get into Russell 2000 small cap trade, because if the dash for trash is truly going to start in earnest, I want to be part of that. So silver, we remain in silver on a weekly chart. It's what I would call moonshotting. Not quite to the moonshot phase yet. I don't know. I don't have a prediction for price on silver. It's not a commodity I track, and I think metals are generally manipulated. So, but yes, silver and gold continues to rise up, and that's, a lot of that I think is demand out of China. I know people talk about that, gold is the ultimate inflationary hedge, and I saw this, give examples of, I went out to eat and my dollar purchased this percent less than it did 10 years ago. And if I had used gold, and my response to that is, go ahead, show me how to pay for anything in your everyday life. What are you going to do? Slice off a piece of gold? One of the things with fiat currency and why it's a currency is because it's easy to use, easy to transact with. Okay. Yes, we all agree gold's got a store of value, but so do diamonds. You're going to use diamonds to go out there, or let's platinum or silver. You can't, and get paid beyond the face value, whatever the coin is. So, but I'm not a gold or a silver bug. It's a trade for me. So I was sort of surprised. I follow Roblox. I was sort of surprised by what happened on Friday with Roblox price. And this is on the weekly here, this is a big engulfing candle. This goes back all the way to September the 1st. So a 30-day engulfing candle, something's up. Tends to be gappy. And I do like to trade this when it's against the 50-day. So I'll have to take a look at that. I've got PPTA, which we've been trying to get in this too. Clean break on the weekly. This looks like it's going to try to take out this 2262. And when it does, I will try to get long. PCT, finally able to get into a PCT trade. We took this down here. This break, we got in right here. Okay. Again, the market sold off a little bit of weakness at the end of the day on Friday. So we did close lower than I was happy with. But I think we'll get a shot at testing the upside of this range, somewhere around 14 and then up to 15. On the weekly chart, what I would call continued consolidation. It's just moving sideways, right? NVIDIA, we were trying to get long NVIDIA on Friday on this breakout. Look what happened. This is a high close doji. It's a reversal. I'm not taking this short until it gets all the way down here to 165-ish. So on the weekly, clean break on the weekly. So I will look to enter some sort of trade next week using this break level as probably my stop, because I think this wants to go higher. At least that's what the chart is telling me. We are in a Marvel trade. We got long Marvel, all right, on this break. Got in on Friday. What do we have on the weekly? We have a weekly breakout. Okay, we not only took out last week's candle, but we took out the high of 728 candle. The next stop for this is 90 to 93. So we are long Marvel. Mankind, one of our members introduced me to this, and to the CEO, by the way, who is beyond the fact that he's obviously awesome because he's an Eagles fan. But the guy's just I'm rarely impressed by CEOs. Rarely impressed by C-suite people. Usually I think they're generally a bunch of douchebags. This guy's not. This guy's awesome. And I'm looking to see, I can't yet, but I am going to try to get into this trade. Probably it's going to have to be above 589 for me, or even 6 to justify the trade. So, but on the weekly, you can see it's sort of, well, on the weekly, it actually is trying to break out. But right now we're stuck between these battle zones, these battle lines right in the middle. And I don't trade in the middle of a zone. Okay. Meta this week, not a good week this week. And on top of that, it's getting closer and closer to this level here at 677 at 691, where it might be a very good short. Google, not a hell of a lot of action on Google. Pretty flat this week. I would say we're still in a consolidation. This is a flag that's going on here. So I would expect the Mag 7, even though I showed you that the underperformed small caps this week, I'd expect money to be flooding back into the Mag 7. All this garbage about the AI thing is dead. That's garbage. That's garbage. Why? Because companies are still spending tens and 20s and $30 billion to prepare for it. So Galaxy is another trade that we got into. We actually got in off this break, and I'll take a look at where we're at when I look at the performance charts. But clean break, it's holding support. It held this retrace here. I'll zoom in for us. So I teach that whenever you have a big candle, the next day it's going to try to retrace, typically around 50%, and that's what it did each of these days. We've got 1, 2, 3, 4, 5, 6 days of higher highs and higher lows. This is breaking out. Okay. So I'm happy with that trade. I tried to get long gold this week, didn't happen. I don't like chasing, so I like to get in after there's been a period of consolidation. Some people like to look for, I want to retrace. Well, sometimes you don't get that retrace. So um, I am wanting to get long gold. I'll do that through the UGL, which is a ultra ETF in gold. Let's take a look at NVX. I'm looking also to get long NVX if we break this 1210-ish, now 1218. It's a big old gap. So if it does that, I'll do a swing trade on NVX to the top side. Looking at Ethereum, came down, tested the 4,000 late a week and a half ago, and now we've just been going straight up. Our next test is going to be at 4720-ish, and then 4880, and then 5,000. Okay, on the weekly, all it's done is held that that 4,000 level, okay, and bounced. This was a strong week. From open to close of the week, it was green. We also closed above last week's high. No, it's not technically a reversal. We need to break this zone right here at top side. This is a big time level. Okay, I think we're going to do it. Bitcoin, same thing. Bitcoin was up. Look at how high we got. We got within spitting distance of the all-time high, and then it sold off. By the way, if you want to know why it sold off, here, I'll show you. There's a company out of London. They're everywhere. This is called Jane Street. So Jane Street likes to come into the market and pound Bitcoin or Ethereum down. Why? They're a trading house, and also they're probably protecting some of their clients who remain short. So, but they just like to manipulate the market. So they'll come in and manipulate the market like this. And the evidence or the fingerprints of that is when you have an all of a sudden out of the blue move, right? Selling or buying. And look what happened here. Okay. So you could look at that on Friday and go, oh my gosh. But then you look at the weekly chart and you're like, oh, look at this. We did a hell of a job. And we're very close. Now we could get a retrace back down to 120-ish, maybe even 117, right? Against this big candle next week, this weekly chart. And then I expect it to take out its all-time highs. Yes, I do. BMNR. I added to my BMNR position on Friday. I'm not a trend line guy, but I can see a wedge forming here. This is either going to break. I think it's going to break this time. And we need to take out first this high and this high. Okay. I believe we will. I don't know. Even on a weekly basis, we're holding the midpoint of this candle right here as support. So we get next week, I think we'll take out this high, and then I'll get my 71 target. All right, let's talk about EOSE. Great week this week. Yes, this is where my team got long, down here at 4 whatever. Here we are riding it all the way up. The volumes have been elevated in EOSE. That's good. As I said last week, weekend's update, that I believe that this was institutional buying, algorithmic buying. What do I mean by that? Well, algorithms are reactionary. So they react to things such as new highs, new 52-week highs. They react to headlines. They react to percent moves, right? Like if it's a big mover for that day. And when I say they react, it triggers them in the morning to buy something. It can trigger them. If you get enough of these data points, such as it hit a new high and it was up 10% and it did 150% of volume and it went above another even number, because even numbers are a big time deal. Okay. That means to me, there's a much higher likelihood that you're going to get a momentum burst in the morning. Okay. Because those algorithms see that data at the market close of the previous day, and then they trigger in the open. So one of the things that I know is going on is algorithmic buying, triggered by headlines. The other thing that I'm seeing, though, with the excess volume is, and I said last week, about 80% of the volume that's over 11 million, 80% of that, and Friday was not as high as we had on, I think, Wednesday and Thursday, over 30 million. This is institutional buying. So there is no doubt in my mind that institutions are buying EOSE. Now, Do I know why they're buying it? No idea. Is there news coming? I think so. They did announce and this is where I hate reading prospectuses. When I did investment banking, I always loved doing the business, verifying business model, looking at comparables. But when it came to the legalese of the warrants I hated it. That was something so this week they had news on, was it Friday or Thursday, about a Thursday night about an offering. And I read it through very quickly, and thankfully somebody on Twitter was kind enough to point out where I was wrong. So at first I thought, oh crap, this is the big offering I thought was coming, 116 million shares. That was just Cerberus's shares. Now those warrants have only a shelf date for about another month before they go bye-bye. I think it's another month. Yeah, maybe even shorter. I don't see that. Well, I don't know. I'd be surprised if those warrant holders just walk quietly away into the night without receiving something. But now they can at least sell their warrants in the open market because it's been over 1150. But again, when it comes to the legal side of it, that's not my expertise. I'm deal structure and selling the deal. So at least that's not where my experience was. Looking at EOS, I think that we scaled this week. I had members scaling for plus 300, plus 400, plus. This week, I will tell you that I had 2 members contact me, and they are part of the Century Club, and the Century Club in our Discord means you've done 100% on your portfolio. Majority of these people doing it in a year, sometimes less, and that's risking less than 45% of the portfolio. Okay, so I did add some more calls into EOS this week, because I don't think this up move is done. Remember my price target. My price target is $15. And, it's funny, Twitter, all of a sudden I see all these people, I think I'll go to 15. I think I'll go to 20. You know what? Garbage. That's garbage. Don't pay attention to it. Couple things. They're jumping on the hype train. That's what I see. When I start seeing FinTwit, more and more experts hop on and making price predictions in their first couple posts, I don't think they know what they're doing. So it's hype. It happened last time too. They got smashed because they went in May, and then all of a sudden the June news hit. But I remain very bullish EOS because I've seen nothing that causes me to think that their business plan that they're not executing. I did see a report. I don't know who he is. Some guy wrote or did a podcast about line 2 coming online in 2026, end of 2026. I don't know. I tend not to listen to any other so-called experts, mostly because most of the time it irritates me, and then 99% of the time they're not offering anything of value. What I know is that we have a couple binary events coming up. We've got earnings coming up. Those earnings report is going to produce results of binary events, such as, did they get more orders? Where are they on line 2? Any additional interest from overseas, update on the UK program. Until we get those numbers, it's going to be very, very difficult for me to really project forward what I think on a macro basis they can do, and the stock for 2026. I do think the stock's being accumulated. I do not know if it's because somebody knows something. Somebody always knows something. I think that it's in the sweet spot right now. It's American made. I think perhaps companies and investors, when I talk investors, I'm talking professionals, are starting to figure out that they truly could be the only only game in town. And of course, we have Cerberus sitting behind them with all of their connections and business expertise. This is an execution story. If they continue to execute, then the stock will continue to go up. I cautioned people on, I think it was Wednesday, when the stock was just screaming. It's easy to what I call straight line extrapolate, where you have a very good day and you start looking, you start doing the math in your head. Well, if this continues to go up, I could retire. And no. That is very dangerous to do, because you're already injecting bias into the decision-making process. Why? Because you want it to go up. You've made plans for it to go up, and you believe it'll go up because you're caught up in the emotional excitement for that moment. It's not going to go straight up. There's going to be another offering. I don't know if that offering is going to happen in the spring. I don't know if that offering is going to happen. I have no idea. I don't think, and yes, the warrants, technically speaking, if they're able to call those warrants, but I saw, and again, since I'm not the legal guy, I saw that they had to trade above 18 for 20 out of 30 days. Well, they better do that very quickly because those warrants expire in November. I don't know if that's possible. I suppose you could take those two data points and say, well, the company's going to try to force it up because they know they need it over 18. I have no idea. I'm watching the stock price, and I'm telling you now that this stock price is extended. Okay. So I've kept dry powder. I mean, I was at 35%. I think I'm down at 19, 20% now exposure in my total portfolios. I wouldn't be surprised to see some weakness. Where's my comment to my Discord members was, we haven't seen the last 10 handle print, but we're going to print that range again because I'm getting a little bit concerned that this stock price is pricing itself to perfection. Meaning, if they don't come out with some slam dunk, awesome earnings report and earnings meeting, people are going to be disappointed. Investors are going to be disappointed, and the stock will sell off. But again, this is experiential. Looking at stock moves like this in the past with other companies, I remain very bullish on EOS on a long-term basis because they are the only game in town, and now they just need to execute. Yes. So this is Goldman Sachs. They create these baskets. Okay, and they're their own internal indexes. So Bitcoin sensitive, quantum computing, the most shorted index, right? Non-profitable tech, high beta 12-month winner, so high volatility stocks, memes, nuclear. Okay, so look at the year-to-date returns of the top performers. The top performers have the highest short interest. Now you can look at that and go, oh my gosh, that's terrifying. No, it's not. It makes sense. It absolutely makes sense. If you have stocks that are up and they are up much, much more than the market, you're going to have a short interest because that's a hedge. Let's put a stake in this whole VIX thing, right? So I saw this past week a couple, high profile guys on Twitter talking about, well, this is day 5 of the market being higher and the VIX going up. And that's only happened X number of times in the past. And when it's happened, the next day or the next week, destruction. Well, no. So if we look at this, because I had to search this out, 32% of the time, the SPX hits an all-time high. It's been alongside a rising VIX. Is that significant in terms of statistical significance? No. But what it tells me is the people calling for the 5 out of 5 days that the SPX up along with the VIX, saying that that's a sign of weakness in the market? No, because this data point destroys that. So let's be careful as we're looking at or we're hearing about these reports out there when we hear so-called experts taking a data point, a random data point, and pointing it out as a reason for why the market is going to do what they think it's going to do. So much of what I see out there are these discussions on broad macro topics, like this is the reason why the Fed is fucking everything up, and so you should sell everything. Look, broad macro topics, especially when we're talking economic numbers, they take time. It takes time to work through the system. If that indicator, if that data point's even correct to begin with. I saw Goldman Sachs came out on Friday in a self-serving, the CEO of Goldman Sachs, and he came out on Friday and said, well, we fear that the market's going to have weakness in the future. Really? Wow, that for somebody who gets paid $1 gazillion to do absolutely fucking nothing, that's the best you can come up with? And so it's just annoying. It's so self-serving. All you have to do is look at the price chart. It's going up. The market's going to continue to go up because, as I said in the beginning, money supply is going into the market. We're going to get more interest rate cuts. So I don't care what Goldman Sachs says. I see and I look at the financial data and I look at the overall data, and all you have to do is look at the historical pricing here. Which trend are we in? Now, you know, somebody can say a caveat to his comment was, Well, he's just pointing out, possible risks. Yeah, okay. Well, then why are you wasting the ink? Because he's added nothing to the conversation. Look, that was done to trigger algorithms. Period. That's why he put that out there. Probably his own firm's algorithms. Because if you think the head of Goldman Sachs or Wells Fargo Criminal Enterprise or UBS are out there and telling you news that will benefit you, then you are the dumbest person in the world. I'm sorry. If 2008 has proven anything to us, is they literally do not give a shit about the damage that they do. I'm talking about the banks, the large institutions. So why the hell would you listen to them? The guys that I listen to, it's not that they're part of the bank or they're part of a hedge fund. It's they're pointing out a data point that is relevant, okay? And it's not this sort of pie in the sky like, fortune cookie statement. I know they piss me off. But look, I'm trying to teach you that you have to be careful of the information going in your brain too. So you got to have a filter there. All right, let's look at what we did this week. I got stopped. I did a couple of rolls. PCT I rolled before we started breaking out. I did scale on this EOS, but I only held it for 5 days. Here's my PCT roll. I did scale one of those for plus 42. So actually the portfolios hit an all-time high at plus 466% cumulative return. That's since 5/15/2023, so a little bit under 2.5 years. This year I am up 64%. This is not arrogance. You've heard me say this before. If you think 12% a year is good, then you're wrong. It's not. It is not a good return. Okay? You're capable of better. Trust me. I've got many members. I had 2 this week that not only did I have additional ones hit the Century Club, I had 2 this week, I minted 2 new millionaires, right? They're over $1 million now. So it can be done. Looking at the average days held, 1498. Let's take a look at my chart. Been a very, very good year. I think I'll hit easily up 500% cumulative by the end of this year. Open trades, these are my open trades. These are those lotto calls that I have, but I still have these 3.5 EOSEs, and these are the positions we added. The NVIDIA. Oh, we did go long on Friday. NVIDIA. I added to my BMNR. I added Marvel. Here's the UPXI. Galaxy. Still haven't scaled. Here's my PCT I did scale on, and I have all these EOS. So I think I'm positioned pretty well. I have 82% of my capital allocated now. 44% is in ETH, 22% in EOS, and 16% in other. I think this will go down in the next couple weeks, the Ethereum position, and the EOS position will go up. And then I have about $10,000 in unrealized gains sitting out there. At the end of the day, I guess I would leave you with this. I think we are entering the most bullish time of the year. I think that from a structural basis, barring a black swan event where a bank fails, it'd be a bank failing maybe due to their private equity involvement or a private equity firm failing. Unless that happens, I don't see that the market has any reason to go down. I think the ingredients are there. Its seasonality is in our favor. And ultimately, I think that we're going to end this year much higher. When I say much, 5 to 10% higher by the end of this year. I think EOSE, everything's going to hinge on this shorter term, their earnings report, and as they update where they are on line 2, and then new orders and all of that. There was a post by one of their employees last week, I think, and he had used the iron chart in hyperscale, and that was on Twitter, and the next day his account was gone. So I think he got slapped on the hands and was probably told shut up. Remember, as we go into earnings, IV, implied volatility, will continue to rise into earnings. That's going to help my option positions, because as IV rises, it's one of the 3 variables that is used to compute an option price, the other 2 being the underlying stock price and the time to expiration. As IV rises, it helps inflate the price of that option. That's going to end right at earnings. You have what's called the IV crush on the day of earnings. So my goal and my plan here is to try to scale more of my contracts, I'm completely out of, I believe, 26s. I'm mostly out of 25s, and I have 27s, a lot of them, and those are the ones I'll look to scale. This stock is not going to go straight up, okay? And it's not healthy for it to go straight up. I don't see right now any fundamental reason why the stock should be going up. This is pure momentum. I'll ride that momentum. People, other investors can be as dumb as they want to be, as irresponsible as they want to be, and drive this price as high as they want to do it. And my members and I are going to continue to take off risk as the stock rises. Almost all of my members have taken out so much money that even out of EOS trades, that even if their current position went to zero, they're still going to be up probably, I don't know, 100% on their original investment. It's wild. Speaking of which, my Discord went to a fully paid status, doing it today actually. $50 a month. I'll use that $50 a month to help pay my mods. We're going to do charitable donations as a group, and I'll pull out some to pay taxes. So it's not a money-making thing, and I don't really care what people on Twitter say. But if you have interest, all you have to do is go to my Twitter profile, and there's the link there. I hope you all have a fantastic weekend. I'm looking forward to the weekend. I've got football games today. I got the Eagles tomorrow. Hopefully they beat the Broncos, and I'm excited for next week. I'm excited to get out of these last 2 weeks of September, the first week of October, because in the market's mind, that's a volatile period. Okay, it's almost as if you get past those periods and the market breathes a little freer and easier because they look at it like, we got through that seasonality. Okay, that's not going to happen bad. Let's move on. Now there's the expectation of, wow, we enter the strongest quarter for Bitcoin, for altcoins, Ethereum, and for the overall stock market. So I think sentiment remains high. I know sentiment remains high. And as I went over the last weekend's report, I'm not seeing anything structurally where leverage is high among institutions. Their positioning even isn't at record levels. So there's still room to run for this market. Any questions, feel free to reach out to me, theboss@mrnodadvice.com. Otherwise, have a fantastic weekend.
Every time that we showing up, get it while I'm living. All I ever hear is the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't want to give it up, we gon' make it out. Get it while I'm living. All I ever hear is the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't want to give it up, we gon' make it out. It don't get no greater, feel like I'm on fire, feel like I'm Johnny Storm.